Good morning and welcome to the Patriot Radio News Hour. I'm Joe Jaquin, CEO of the Patriot Trading Group. I'm going to give you the number. And I know it's hard. It's hard when you know that you've fallen victim to the don't worry, be happy, everything's wonderful. The man behind the curtain, 800-951-0592. Here's what I do, really simply. I sell insurance. Yeah, just not the kind that you normally associate, like automobile insurance or health insurance or life insurance. We sell wealth insurance. See, we live in a time, in a time where fiat money, and money's kind of a strong word for it, what I like to call just pieces of paper with pretty colors on it, and maybe some aren't even that pretty, that they pawn off as money, has created the biggest debt-laden society in the history of the world. And now we find ourselves possibly getting ready to struggle again with this. And when you buy gold and silver from us, what you're saying is I want to protect my wealth. Right? I want to keep what I've worked so hard for. I want to maintain its buying power. And I'll give you the easiest example. Up until 1933, right, when the government closed the banks and confiscated the gold, all through the direction of the Federal Reserve. Just imagine if you had 5 $20 liberties, or maybe $20 saints. Okay, that'd have been $100. 100 Federal Reserve notes. Now, if you found that $100 today, so you had 5 $20 liberties or saints, however you want to do it, and you had 5 $20 bills. They were worth the exact same. Today, those 5 $20 bills, that'd give you, $100? You couldn't even buy one tire for your car. If you drive my wife's 2009 Escalade, and it was empty, and you had to fill it up with gasoline, you could almost get it done. It'd be close, right? Right on the, right there, about 1 tank of gas. If you had the 5 gold pieces today, okay, the 5 gold pieces today, you got about $7,000. That's the type of insurance we sell here. Do you want $100 or do you want $7,000? I mean, that's really what we're talking about here. This is what gold and silver does. It doesn't really make you money. And this is why Wall Street hates it, right? They hate it. Right? Remember when they used to argue about how gold didn't pay money or pay interest? Remember? Oh, it's a horrible investment. It doesn't even pay you interest. Now they don't pay you interest. So it's putting your money in the bank. It's a horrible. Why would you put your money in the bank? It doesn't pay interest. In some places, it pays less than that. I got a note here. By the way, 800-951-0592, the website at allamericangold.com. Friday, I got a box here at the office. Inside the box, I had this note in 4 hats. I want to read this to you. It was addressed to me and then my uncle. First off, thank you for all the information and the money that I have made buying gold and silver. And again, you didn't make any money. That's not really what you did. What you did was you insured your wealth. By buying gold and silver today, 10 years from now, you'll have been able to maintain your purchasing power. You know, it's just like a head of cattle. 100 years ago, you could have bought a head of cattle, right? Could have bought a cow, the whole cow, for $20. Today, buy a heifer here, for $1,400. That's what it does. I thought I would send you a gift. Eric was the first person I ever heard mention the tinfoil helmet. By the way, he got that from me, okay? By the way, this was from Mike. Just so you know, Mike, he got that from me. Ever since I've started making imitation tinfoil hats/helmets, who better to give a few to? The reason for calling them imitation is there isn't any tinfoil in them, right? You can't even get tinfoil. I'll finish the rest of this before we get into the day's stuff. Patriot Radio News Hour. Don't touch that dial. 800-951-0592. Before this is over, the question isn't going to be how big your 401k is. Because as I've so eloquently, if I may say, pointed out, no one really has any money in it. I mean, a few people do. Sorry, I had to take a drink there. A few people do. But the 90% of 401k holders have less than $100,000. The vast majority of them have less than even $50,000. And it's been the greatest con job ever enacted on the American public. The question is going to be, how much does it weigh? Those that have the gold make the rules. And I hope you're smart enough to see through what's happening. I hope you are. And I hope you start getting back to getting serious about getting yourself prepared. But I want to finish this letter here from Mike. Because he's right. You can't go buy tinfoil. I've got a couple of helmets that are they're the aluminum foil. You buy it at the supermarket. Mike said he made his out of Mylar. And he made me 2 kinds. So I've got what he calls the original, which is the tinfoil is on the outside. And one of them, I love it. I actually had one on. And I'll tell you what I'll do. We'll get a picture of them. I'll have one on. I'll get Wendy. I'll get Arlene. We'll take a picture of it. We'll post it. Maybe we'll we'll post it on Facebook. We'll do something with it. We'll post it up there. But my favorite one is, if you've ever seen the movie, now I'm going to forget the name of the movie, Burgess Meredith, Walter Matthau, Grumpy Old Men. The hat that's got the ear flaps, you can flap them down or flop them up. That's my favorite one. But he gave me I got 2 originals, and then he made a different one. So if you're into tinfoil helmet making, the secret imitation tinfoil helmet, he actually tinfoiled the inside of 2 helmets. Yeah. So on the outside, just looks like a puffy hat. It is. So there you go. Got creative. The tinfoil helmet collection continuing to grow here at Patriot Trading Group. Mike, thank you so much. I wanted to give you a shout out. We loved them. We laughed. I was wearing it all day on Friday. So there you have it, the Tinfoil Helmet Club. So, as I was telling you, and I guess gold's up 15, 13.21. Well, 13.20 and 80 cents, $1,321 on gold. Silver's up almost 20 cents, $14.75. The Dow down again. Right now, the Dow's down 50. The S&P's down 11. The Nasdaq's down just under 100 points. I think we're back, 24/7 in change right now on the Dow. One of the things, now you would think, the way they act, that everybody was out there buying this stuff up like crazy to 22,000. Well, I got just below that, 21,900, something like that. And, the Federal Reserve, they misspoke. They had a bad day in December. The last rate hike in December, which, by the way, was too much. And the Dow fell, and then they've rallied it back. And, oh, no, everything's great because the Fed said, oh, no, we're sorry. Blah, blah. That was all. Wasn't true. But really what wasn't true was who bought it. Were you buying it? I mean, you always have your 401k money as you put it in there. But come to find out, and this is something that Eric had always wondered about and worried about, was when the baby boomers retired, who was going to buy the stock market? And I haven't paid a lot of attention, and maybe I should have. Volumes. And I've said this in the past. Volumes are about half of what it was when I started. So we have a machine that directly connects to Wall Street. And I know the shares traded on like the NYSE and on the NASDAQ, and used to be the NYSE, as an example. The volume there would always be, on the Dow Jones, the volume would be, somewhere between 1.5 billion shares, to 2 billion shares a day, every day. Heavy volume, it could get up to 3 billion. Light volume, maybe it was 1 billion shares. Today, I can't even tell you how many times it's even gotten to 1 billion shares traded. It hardly ever happens anymore. On the NASDAQ, NASDAQ used to do 2, 3, 4 billion shares a day all the time. And again, now a really heavy day, maybe 2 billion shares. And I know that sounds like a lot, but in the last 15 years, half of the volume, give or take, has disappeared. And then this latest run-up, I'll call it and I'll call it what I said it was going to be the whole time, a dead cat bounce, wasn't bought by individuals. Corporations have been the biggest buyer of stocks since President Trump won the election. So you think about that, this bull market, they're the biggest buyer. Typically, the public had been considered the crowd in stock markets. When I started here, that was it. Or put another way, dumb money. Right? That's just kind of what they did. Retail investors tend to buy the most at the top and sell the least at the bottom. See, and I try to convince you guys to buy gold now because it's the bottom. It's not the dead bottom. You missed the dead bottom. Right? The dead bottom happened 3 years ago. It got to 1,050, completely retraced its steps. And still here, we're sitting here at $1,321. And you're going to look back at this as another one of those. It's like when I started at Patriot all those years ago. The dead bottom had been 250. Right? I started working, it was in the low 300s. It's a great time to buy. This is it again. And one of the things that as I sit there and share this with you is this is what's happened to the debt markets. Right? The public is tapped out. The baby boomers, right? You guys are retiring. The younger generation, I mean, they're still living in their parents' basements, 30%. And I'm not talking about 18-year-olds. I'm talking about 30-something-year-olds. Retail investors have not been participating much in the market, making it harder to use that crowd as an indicator of sentiment. Now, part of the reason why, right, we've been getting these ridiculous confidence numbers. And now it kind of makes sense, doesn't it? Right? These businesses, because they're, buying back their own stock. Strong public selling should be bullish. That's what they used to do, right? They'd wait for you guys to sell, and then they'd buy it all. But perhaps the crowd this cycle is corporations. Now, perhaps. Right? The public, it appears, to be out of this market. Right? In other words, hey, we've got the 401k money for those that have it. But that's about it. The non-financial corporate crowd. And they're talking about piling into stocks with buybacks, right? The non-financial corporate crowd. So take the banks out. What do you got? Buybacks, mergers, and acquisitions. We've seen a lot of that too. Not as much as I thought, but we still see a lot of that. New corporate offerings have jumped to the highest level in years. Of course, that's been well down. The IPOs and Lyft and Uber, right, they were huge. So, and by the way, they took a bath on those. Investors believe it's a basic supply and demand equation. Come to find out, it really hasn't been. It's not that everybody loves America's stocks. It's just been the owners, the stock, the companies themselves have been the only ones buying it. And now they're talking about what's happening next, and they said that they're starting to see cracks in the amount of debt issuance. And this is a big number, and we don't talk about this enough. Are these companies looking to borrow money? Now, we've seen especially in the last 10 years, a big jump on companies wanting to borrow money. Now, they're doing it for one of two reasons. They were broke, right? We're seeing that like the retail. The bankruptcy starting to pile up, right? We've seen that in the retail space, right? They're shaky, right? And I've talked about what? The quality of loans. How much of these loans are going to bad companies? They're junk. And then, of course, the other one, borrowing money to buy back their own stock. See, they're not buying it with cash. And that's such a huge misconception. People think, oh, we're buying $10 billion of our stock back. Not like they're taking their cash out of that's not how they're buying it. There's been a dramatic change, according to the banks and the financial institutions and companies wanting to borrow money. And I think this is going to be a scary time. We'll see. It looks like we're going to retest those lows that we saw in December. I just don't know who the buyer is going to be. The American consumer, I'm going to talk about their feelings when we get back.
This is the Phyllis Schlafly Report, a daily commentary continuing the conservative pro-family legacy of Phyllis Schlafly. Now the president of Phyllis Schlafly Eagles, Ed Martin.
The most important case before the Supreme Court could be decided any day now. At issue is whether the upcoming 2020 census will be allowed to include one very simple question. Is this person a citizen of the United States? As you might imagine, leftists aren't so happy about this question. Yet the census includes questions about race, sex, and age. Citizenship status is just as important as other demographic details. As Justice Brett Kavanaugh pointed out during oral argument, other countries routinely ask their residents about citizenship in their censuses. Fellow Trump nominee Neil Gorsuch signaled his support for allowing the question about citizenship. Justice Alito seemed on board too, and Justice Thomas is expected to join this conservative bloc. Still, the mindless zombie horde of the left has created an uproar over the issue, and the left side of the Supreme Court dutifully followed the party line throughout oral argument. The leftists on the Supreme Court are not the only judicial activists attacking this reasonable move by the Trump administration. At trial in a lower court, an Obama-appointed judge named Jesse Furman openly attacked Commerce Secretary Wilbur Ross for authorizing the citizenship question. The district judge declared that Ross had somehow, quote, violated the public trust, end quote, by including this question, even though similar questions have been asked many times in the past. That smear was unfair, but the litigation machine on the left has obtained additional federal court rulings to block President Trump's citizenship question. Let's cut through the politics and talk about the facts. No one can be deported for truthfully answering the question about citizenship on the census, but we would learn how many illegal residents are really here in America. That also means liberal states like California and New York would not get extra federal dollars and congressional representation for these non-citizen aliens. In short, it all comes down to whether America wants to hold up the standards of fairness and truth, or whether we would rather be ruled by a culture of corruption and deceit. For now, the American people will just have to wait and see what the U.S. Supreme Court has to say on this important case, Department of Commerce v. New York.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Illegal immigration burdens our schools and social services and opens doors to criminals and terrorists. Outdated visa programs divert jobs from Americans. PhyllisSchlafly.com chronicles these outrageous unfair practices and provides answers. Go online to PhyllisSchlafly.com. Thanks for listening, and join us next time for the Phyllis Schlafly Report.
800-951-0592. So here's what's happening on Wall Street. The consumer's out. They've been out. The companies have been borrowing money to buy stocks. It's hit a wall. And now the stocks are falling again. And I don't know how this works, but I look at housing. Because we entered this cycle where when the Fed started to raise rates, every time housing slowed down, there'd be talk about rate cuts and this and that, and the 10-year note would fall. Mortgage rates would come down. and sales would pick back up. That's not working anymore. Matter of fact, home sales keep falling. The consumer making up the smallest part of home sales since the flip boom. Remember, I was doing all the stories about the flippers, right? And now all these home sales have stopped because the price doesn't rise. The flippers are starting to lose money. The 10-year note, man, I thought it was done. It's not done. We were at 325 when the Dow crashed in December. Right this second, we're at 2.1. Got as low as 2.07 while you were sleeping this morning. Mortgage rates have come way down, yet home sales keep falling. So do car sales. People are starting to worry, and remember, they're all connected. I've told you about the debt levels that consumers have. I told you about the defaults, how they keep rising. Credit card defaults, auto loan defaults, right? Student loan default. No one's even paying a student loan. Shouldn't say no one. That's an exaggeration. 20% of the people are paying it. This morning, we got two pieces of economic data out. One was construction. The other was the Purchasing Managers Index, the Manufacturing Purchasing Managers Index. It got worse. It fell to 50.5 in May. So remember, expansion is anything above 50. We didn't get to 55. We got to 50.5. By the way, this is the lowest reading in 10 years. So now we're all the way back to September of 2009. New orders actually contracted. So the index stayed positive, barely. New orders fell into contraction. Now you're like, double, come on, it's only one survey. It's the first time the Manufacturing Purchasing Managers Index new orders has been negative since August of 2009. You think back, people forget. I think we're only on QE1 at that point. I don't even know if we had QE2 yet. That was the last time this number was negative. They said that many manufacturers endured one of the toughest stretches in nearly 10 years. The survey respondents said that weak client demand, drops in new orders. Firms were also saying customers were postponing orders that they already had placed. Because, you order it today for delivery 6, 8, 10, 12 weeks from now. They said new business contracted at the quickest pace in years as well. Employment growth, obviously, the slowest since 2017. That was the number from the manufacturers. And again, remember, I told you well before December, back in October, things were slowing. And you be ready, get ready. And of course, The idiots that try to keep you convinced it's not, the cheerleading squad, try to tell you, no, it's going to be fine. And all the Fed has to do is cut rates a couple of times, and it'll be fixed. I just told you about the 10-year note. The 10-year note's actually acting like the Fed has cut rate, what, 4 times? I mean, the Fed's funds rate's at 2.35. The 10-year note's barely above 2. Right? The 10-year note historically is supposed to average at least 2 full percentage points above the Fed's funds rate. Not supposed to be below it. By the way, the lowest 10-year note yield ever was 1.37. I mean, we're less than a point away. I mean, we're about 3/4 of a point away from the lowest ever. That was back when rates were 0. Something's really not right. I don't know what it is. I keep hoping that the slide's going to stop. But then I get this data. I get the ISM data. I'm like, that. None of that report was good. Then we get construction spending. Now, construction spending was supposed to rise. It always does at this time of year. It didn't. Dead flat. No pickup in the housing industry whatsoever, despite falling interest rates. I mean, they've fallen a ton. And there's been no increase. They said outflows or outlays in April. This was an April number. Completely unchanged. Construction companies saying home builders are building next to nothing. I don't know. Patriot Radio News Hour. I keep wanting to be wrong. Hasn't happened yet. 800-951-0592. Patriot Radio News Hour. The Dow down 75 points. The Nasdaq's down 100. S&P's down 13. Gold's up now $15.50, $13.21.5. Silver approaching now $14.80. 800-951-0592. Gold's risen almost $10 since the show was, or $5 more since the show started. It was up 10. Now it's up 15.5. I've got U.S. $20 St. Gaudens. They're $1,425. I also have Liberty, same price, $14.25. 800-951-0592. Volume discount. You want to buy 20 or more? We'll knock the price down for you. But I'm going to tell you right now, all the prices on the web, all the prices got to go up. And all of the things, again, and how many times have I said it? I can be wrong for a little while. Because I'm not wrong. Just takes a while for Wall Street to figure it out. Remember, every crash we've had, right? All-time high, tech bubble. Blows up. 87 crash, all-time high, blows up. Housing market slash, you know what? The housing market didn't even crash, did they? They didn't the markets didn't crash till 2008. Called it the financial crisis. And now, you know, and I hear all of these guys talk on TV. I don't get it. But I'm worried now. The bond market, this is more than just a little blip. We've seen blips, but it comes right back. It's not coming back. And now the data is starting to get ugly. This one just came out. Well, and I don't know if I just saw it during the break. It's called the Case Freight Index. Every month this report comes out. It tracks all measures of freight into and out of the United States. Okay, this is the broadest freight measure there is. It's now down 3.2% year over year and falling fast. So this was a big surprise. They were thinking down, they were hoping for down 1.5%, now down 3.2%. And they wanted people to know. This data was collected before the president announced the tariffs on Mexico. And they're saying that they expect these numbers to now get even worse, and you just start putting it together. Freight, ship, rail, truck, you name it. We're 3.2% less this year than last year. And think about it, this is how everything gets done, right? ISM Manufacturing. I mean, it was positive. I mean, barely. But then you look at the thing that says, okay, is it going to stay positive? New orders. First time it's been negative in a decade. By the way, the positive reading, the lowest in a decade. Are you ready? And here's the part that I worry the most about when I talked about who's going to buy it. We're not buying it. I gave you the numbers, right? They said all of the buying's been done by corporations. That was a big part of the tax cut and the deregulation. They bought back their own stock. Now what? And I don't know the answer. But I do know there's guys out, well, the Fed's going to cut 2 more times. Now, this year, right? That's the new plan now. That's the new, hey, don't run out of stocks. Fed's going to cut rates twice this year. I don't know about that. I don't think they're that smart, number one. But number two, I look at the 10-year note. I look at the entire bond market. It's actually priced in 4 cuts. And it hasn't. Things still are getting worse. Why does the Fed have to cut rates? The bond market's done it for them. I don't know. But I do know this. Call or don't. Prepare or don't. But I told you a year ago, 2018 was the first inning of the debt bomb cycle. Every one of these corporations is loaded with it. They're loaded with it. They can't afford to slow down. The American consumer, loaded with it. I didn't even get to, right, the millennials. By the way, it's the poorest a generation in their age group, 22 to 38. It's the poorest they've been since they tracked records. Of course, they've been tracking records since the baby boomers when you were millennials. They've never had such little money. 800-951-0592. Patriot Radio News Hour. Final segment on this Monday. $800-951-0592. $20 Liberties and Saints at 14 1/4 at 800-951-0592. Gold up $16 right now, $13.21 and change. Silver's 1480 up over 20 cents. The Dow in negative territory, down 60. The Nasdaq's down 100, and still early. The economic data today did nothing to settle down the bond market. The 10-year yield fell even further. Now you think about it, we've got the 2-year, the 5-year, the 7-year, all under 2%. The 10-year right near it. The 3-month note, by the way, yielding 2.34. The 1-year note yielding I think it was 2.17. So now this yield curve inversion is getting worse, not better. That's not a good sign. We'll have to wait. We'll see how it all plays out. But so far, anyway, it appears that the slowdown that they knew was coming, they knew it in the fourth quarter, appears to be here. And this was, most of this data, if you listen to me, was April data. This was when we were going to agree, which all right, that we're going to sign a deal. This doesn't have the trade war in it. The only one that was a May number was that freight index that I just shared with you. And that one's pretty scary because that's a big drop. If freight volumes are down 3, 4, 5%, what does that mean for GDP? Right? Logic kind of tells me, well, it sounds like it may be down 3, 4, 5%. I don't know. 800-951-0592. Don't forget, coming up next, right here at 1360, the new open forum. It's going to be some of the most exciting 2 hours in radio. Today, Steve Stars kicks it off. He's going to be covering the Lincoln assassinations, all the things you thought you knew. I'm so excited for it. We got guys like Dave Hodges, Paul Martin, hopefully Glenn Tate as well. They're all going to be a part of the open forum that's coming. So for those of you not in the Front Range area, just go to 1360khnc.com and you'll be able to listen live. By the way, the podcast for those sometime today. The Friday edition of the open forum, which was the creature from Jekyll Island, will be available on our website via podcast. And so will the Colorado Front Range Hour. All of those shows will now those two shows this week will all be at 1360 starting sometime today. So if you can't listen live to the Lincoln assassination and Steve Stars tomorrow, that show will be up on our website at 1360khnc.com. While we're submitting stuff to iTunes and all that, in about 2 weeks, it'll be out in the whole, I guess, the podcast world. But until then, you'll have to go use our website. 800-951-0592. Remember what I told you. Heed my warning. How much does your portfolio weigh is going to be the question. We'll be back tomorrow.